Hello, I'm attorney Lewis Haskell, and I just had a client leave my office with what is really one of the most common tax season documentation problems, and it has to do with his health savings account. I know from his W-2 form that he has a health savings account because that actually shows up as a box in the W-2. However, he did not give me it's a 1099 SA. He did not give me the reporting form that shows me that he used the HSA. So I asked him if he used it, and yes, he did. What happens is that because everything that has to do with HSAs tends to happen paperlessly, the documentation for it, the 1099 SA, also tends to occur paperlessly. And most of my clients, they have their HSA at Fidelity. Some have it at HSA Bank or Health Bank or whatever, but they never actually have set up an account in these places. They've never actually dealt with these places. And so these places are giving it to them electronically. They must actually go into their account and download the document. And again, the document is a 1099 SA. They don't know to do that. It doesn't occur to them to do that. After all, they were told that when they use their HSA for medical expenses, it's not taxed. And that's correct, it's not taxed. However, the 1099 SA, like all 1099s, is a reporting document. It goes to the IRS, and the IRS expects to see that on your tax return you have reported that you used your HSA, because you can take that money out of your HSA and spend it. And if you do, you get taxed on it. And in fact, you get penalized on it sometimes. So what happens when people don't report the 1099 SA is that they will get a letter, a CP 2000, probably in September. That's been my experience in the past. They'll get the CP 2000 saying, hey, look, you've drew all this money from the HSA. You didn't report it. We're going to tax you on it. We're going to penalize you on it. And then we're going to charge you penalty and interest for not reporting it in the first place and not paying it when you're supposed to. And it all becomes a horror show. I mean, it's not a difficult fix, but it is a pain in the neck. And I tell my clients that when a lawyer says pain in the neck, that just means it costs you money. So the best thing is just to get it right the first time. In the case of this client, I had him go into his Fidelity account and give me the 1099 SA. And so it's now reported. And of course, it was all used for qualified medical expenses. So he incurred no tax liability for it. And more importantly, he's not going to get a letter in September saying that he didn't report it and that he owes money and we now have to fight with the IRS. It is so much easier just to do things right the first time than to try to fix things later. And again, when a lawyer says easier, that's a term of art. It costs less. Thank you.